Well, this is India's decade and her century, and that seemed to be the consensus at the biggest business summit of the year, the ET Global Business Summit, which held place in New Delhi over the weekend, where all policymakers discussed the vision for India 2.0, said that India is on the road to become a developed nation in the next few decades and will continue to be the fastest growing economy for the years to come. India Inc. leaders also sort of shared their roadmap for growth and expressed faith in the economy. Startup leaders also committing to investing on innovation amid brighter prospects for entrepreneurs. Right, Avanne?
Absolutely, the way ahead, and talking about the kind of progress that we've made. We had some of the top policymakers as well speaking, giving us insights into the road ahead for the country. But that aside, Ayesha, let's also put the spotlight on the equity markets. And for the week gone by, well, the Nifty managed to underperform some of the global indices as well. So we wrapped up the week with a cut of about 1/3%. And that's exactly what Friday's trading day was as well. It was the broader markets, in fact, that were under quite a bit of pressure. So an underperformance was witnessed, while the rest of the global markets, well, they managed to eke out gains of about 0.5% plus. But it was a record week in particular for the S&P 500. So if we're comparing ourselves, Ayesha, to the rest of the globe, not the best of weeks.
Not the best of weeks, but quiet consolidation amidst all the global news flow, fresh geopolitical tensions as well, which we've heard about over the weekend as well. So yes, banks came to the fore, but it was largely a commodity-led move wherein the private banks once again continued to underperform, as did some of the other rate sensitive. So that was pretty much the texture of the market. The good thing is that this morning you have a decent handover from the rest of the globe, and at least the GIFT Nifty is indicating a mildly positive start, so indicating an uptick of about almost 81 odd points. At the fag end of earnings, so let's see which way the markets actually move from here. The Nifty implied open is indicating a start above that 21,900 mark. But lots of earnings as well, and a lot of mid and small cap companies which are coming out with their numbers. So just to give you some color about what really is the earnings calendar looking like, there you can have it on your screens. PI Industries, Inox Wind, they've all delivered a decent set. Although the large chunk of the large cap earnings, that's Hero MotoCorp, that's been ONGC, Aurobindo Pharma, they've all been in line. ONGC, of course, is going to be key to really look out for, given the kind of traction that you've seen in ONGC of late. Let's see what the street reacts to this inline set, although that was in Q3. What the street is actually pricing in, what happens in Q4. So let's see. There's Honasa Consumer as well, which came out with its numbers, SCI, and I'm particularly reading out the entire PSU list here. It was subpar though for Tata Power. We're going to be chatting with the management as well in the due course of the show. So let's see what the management actually entails. There was Bandhan Bank, Divi's Labs, Midhani. That was all a subpar set.
Okay, I just want to quickly flag off as well how the global markets have shaped up, and you had Wall Street, which wrapped up Friday's trading session pretty strong. You had the inflation reading that came in, the S&P 500 closing above the key 5,000 level for the first time ever. The Nasdaq rallied about 1.25%. The Asian markets, though, it's a holiday shortened week for the most part. China remains shut for the entire week, but and you've got some of the other major markets in Asia Pacific close Monday. That's Hong Kong, Taiwan, and South Korea. So do keep that in mind.
But let me bring on board Naresh Mirani as well as Kunal Bothra and find out how trade today is going to look like, or for that matter this week. Kunal, Naresh, hi, morning. Kunal, a pretty ranged Nifty all through last week. What's in store for us now?
Yeah, I think so. Two adjectives, ranged as well as volatile for the indices, because over the last, 1 week or so, the index has been defining a range at 21,500 as a support and 22,000 broadly, 22,100 as a resistance for itself. Of course, the underperformance for the Bank Nifty is one of the major reasons why the indexes, the benchmark indices are a bit volatile. But I think the good part so far is that the Nifty is still trading above the 50-day moving average, even though at a point when the Bank Nifty has double tested its 200-day moving average in the last 1-2 weeks of price action. So I think net it all depends on how the underperformance of the large cap private sector banking stocks they weigh on the indices. If they continue to be a bit choppy and they're selling on the back of higher volumes, then we expect the markets to be a tad bit more volatile. There's no major change in terms of the open interest data for both the Nifty as well as Bank Nifty, which indicates that either there is a major bottom formation or there's a build-up of short positions for the Nifty. But I think just looking at purely the price actions over the last 1 week or so, I would expect the markets to remain to this broad 600-700 point range for itself.
Yeah, quiet consolidation perhaps is how we can describe it. So Naresh, what is the level that you're tracking given the fact that we have seen quite a bit of underperformance within the broader universe too?
So we finally saw some bit of underperformance in the broader universe as well, which has moved up quite a bit compared to the Nifty. So the Nifty did not make a fresh new high, but we had mid cap and the small cap indices make new highs. Even the Nifty 500, Nifty 50 equal weight, etc. So overall, we are getting into a phase where we again get into a consolidation, even on the broader markets. Until the last few weeks, we were in a consolidation in the large caps, but we could get into a consolidation in the mid cap and the small cap. And also, this is the last week of the result season, which is where you have a bunched up numbers for the small cap. So we'll see some bit of consolidation for at least the next few sessions. So stuck in that range of 21,600 on the Nifty, 22,100 on the upside. Till the time we don't cross that or we see leadership from the banking space, would expect this to continue.
Kunal, you've got a financial tilt in your buy calls this morning.
Well, yes, and both of them are PSU banking stocks because it makes a lot of sense to go with the performing sector and the one which has been doing pretty well. So two stocks from the category PSU banking names. First is SBI. Looks attractive for a breakout rate further from current levels. 3 consecutive days of strong price uptrend. The stock has moved some 60 to 70 points in the last 3 days, expecting another 25 to 30 point up move for SBI from current levels. 755 as a target. Stop loss at 706. And Bank of Baroda is the other stock which will be bullish on. That stock looks attractive. Again, I think one of the best performers in the previous week on closing basis. So would look out for targets further on the upside to 78. Stop loss at 259.
Okay, it's PSU banks that dominate Kunal's list. And Naresh, no surprises to see Maruti yet again as one of your favorites.
So continues to be a favorite ever since that 10,000 retest. And we've seen in the auto pack, there has been a classical rotation. So we started off with Tata Motors, then we saw TVS Motors, then we've seen Bajaj Auto and Hero MotoCorp. So out of the whole basket, the only one left to actually perform has been Maruti. That too has taken leadership, finally coming towards the previous all-time highs. A strong base done at 10,000 and now setting up for a move above that 11,000 mark. And a good risk reward given the market's condition into be a range. So stop loss at 10,400, a short-term target price of 12,000. Second is a buy on Apollo Hospitals, which has been slowly and steadily continuing in a strong uptrend. A fresh flag formation breakout on Friday. Expecting this momentum to continue. Stop loss at 6,300, target price of 6,800.
Okay, let's talk individual stocks as well, which are going to be in focus. And Somit is here to flag off all the stocks in news this Monday morning. Somit, you've got a pharma-heavy list. Let's start off with Aurobindo Pharma's report card.
Well, if you see the Q3 numbers, they were pretty much in line with what the street was expecting. Revenues were up around 15%. EBITDA increased by around 68%. Margins came in at close to 21.8%, while the net profit number, that was around 91% higher. Now, the US sales number, that is the key number for Aurobindo Pharma to watch out for, that was up around 10% on a sequential basis to close to $451 million US. Now, this was ahead of what the street was expecting, and that was largely because the company had launched a Revlimid in the month of October 2023. Now, because of this Revlimid launch and because of better mix, margins were also seen a large uptake from around 14.9% to 21.8%. Apart from that, other segments, if you see, the oral segment increased around 9% on a sequential basis, while the specialty and injectable product sales were up around 22% on a sequential basis. Now, during the quarter, the company launched nearly 21 new products, of which 4 were specialty and injectable products. Now, apart from the earnings, the key thing to watch out for on the conference call today, which is at 8:30 p.m. would be management commentary coming in for the Form 483, which was issued to its Eugia 3 plant. Now, this is one of the largest injectable plant for the company. It contributes around 10% to the top line, and the EBITDA contribution is around mid-13s. Now, since the Form 483 was issued with around 9 observations, if you see, the stock has declined nearly 13% from its recent high. So that is the one commentary that we need to watch out for. The call is at 830. Anything positive coming in, or at least no negative coming in on this Form 483 that has been issued to UGR3, could lift the stock higher in trade today.
Okay, that's Aurobindo for you, and we'll be watching out for the details in the conference call later on. But quite a different reason that Dr. Reddy's is in the spotlight.
Yes, again a positive news in fact for Dr. Reddy also. Now they have also received the establishment inspection report with voluntary action indicated for its FTO03 manufacturing unit. Now this FTO03 is the Bachupalli Hyderabad unit of the company. The unit was inspected back in October 2023 and had received around 10 observations back then. Now when this Form 43 was issued to Dr. Reddy, the stock was down around 5% because the street was expecting an import alert to come in for this plant. Now why this plant is important? Because this unit manufactures nearly 100 products for the company. Analysts believe the contribution on the top line is close to around 30% of the US sales. It manufactures 4 out of the top 10 products of the company, and nearly 70 products manufactured in this unit are commodities that have been done. Now what is this EIR, VII, and why is it positive for the company? Now EIR is the establishment inspection report, VII is the voluntary action indicated. Now VII is the classification that has been given to the company in the establishment inspection report. Now VII means that objectionable conditions or practices were found during the inspection, but at this point of time US FDA will not take any administrative or regulatory action towards this unit, which means that there won't be any import alert, and there has been no ban on this plant, and the operations could continue going forward in this plant. Now as I said earlier, that the street was expecting an import alert, and no import alert coming in for this plant is actually positive for Dr. Reddy. So we could see a positive start for Dr. Reddy as well.
Kunal, how are the charts looking for both DRL as well as Oro Pharma?
For DRL, in fact, it's actually looking very attractive because the stock looks like it's starting to get into a fresh breakout trend and a longer term trend for itself. So I think one of the few pharma names which have been a bit sideways, I would probably say, over the last many months of consolidation as compared to the likes of Cipla, Sun Pharma, which have been classical breakouts. I think Dr. Reddy had been an underperformer, DVS Lab has been a huge underperformer. Oro Pharma, I think, would probably come as a surprise, because if in case the stock actually found a support closer to the current levels where it's trading right now after that sharp sell-off the stock had seen last week, this could actually be a good mean reversion for Aurobindo Pharma. So Dr. Reddy is something which I'm very bullish on. Oro Pharma, I think it probably depends on how the stock takes support at current levels.
Yeah, just about 2.5% in the last 3 months. Thanks for that. Thanks, Amit, for giving us that heads up. Quick break. Be right back with lots more market talk.
Welcome back. Mr. Sanjeev Bhasin is also joining us on the show. Mr. Bhasin, I wanted to take a leaf out of what the minister said at the Global Business Summit, and especially the power minister, who's, in his own words, power sector is the biggest game in town. That's the space where all the action is, and he is very categorical that he expects the pace of reforms to continue or accelerate, and hence the rewards in the stock markets will continue. He said power sector is the space that will reward you the most. Do you concur with the view?
Yeah, good morning, Anisha. And well, firstly, take it from the PM. He said in his third term, we will be the third largest economy in the world, which means the market cap will double in the next 5 years. So purely the direction is clear. It is just that, we want them to come back. I think the power minister has been exceptionally, his work has played out exceptionally well. Particularly, the recovery from state electricity boards, the strengthening of the mechanism of payments, all this happened after COVID. REC, PFC have had the best asset quality and best what we call NIMs in the industry. I still think there is room on the upside, but you have to take it with a pinch of salt that most of these stocks have already outperformed in a big way. However, like we said, we are in a power surplus situation, which means recoveries are the key over here, and distribution transmission losses must be at the least. So I would still go with the Tata Power and an NTPC, and on declines at REC PFC. As a disclosure, these 4 stocks are in our portfolio also.
Meantime, Sanjeev, let's also get in your thoughts then on Hero MotoCorp. How are you reading into the kind of quarterly numbers that the company delivered? I know one of your favorites within this entire auto space is an Ashok Leyland, but what else are you tracking?
Yeah, good morning. So, Avanne, we gave this call to you that it will be 5,000. If you remember, there was a downgrade closer to 4,200. And I stuck my neck out that Hero's numbers will be the best ever in the last 18 quarters. And proof of the pudding lies in the eating. Every third motorcycle which is being charged is a hero. Secondly, their new launches have done extremely well, and with rural incomes picking up, the stock has done extremely well. However, at 5,000, there is not that much room on the upside. So look for declines, but it continues to be one of the outperformers along with Bajaj, and that is because purely that the last 2 years underperformance because of not pick up in rural incomes. This was a laggard, but I think the numbers have been stellar. We are all awaiting the launch of the Harley. Even I have booked one and I'm waiting for my turn to come. I think that will be the next game changer, maybe over the next 4 quarters.
Game changing visuals also, Sanjeev. We are waiting to get that clip of you on a bike.
Yeah, good morning, Ayesha. I'm waiting my turn. How fast it comes, let's hope. I will speak to the management. Maybe they can speed it up. But that's been my childhood college dreams to ride a Harley.
Yeah, absolutely. Aspirational dream, isn't it? A lot of other numbers as well, which are going to be in focus. Look at what Bajaj Hindustan, for instance, has done. It's reported an EBIT profit for all of its segments. Even though prima facie, it seemed like the numbers didn't quite match up with the street estimates. But the company's actually turned profitable versus loss last year. But Sanjeev, in the interim, we've seen a very ranged move from the entire sugar pack as opposed to what, most of them clocked, say, about a year and a half back. You think the meat of the rally in sugar is behind us?
So take the case of Bajaj Hindustan. It was 6.5, 7 rupees a year and a half back. That is when we really said that a BIFR case cannot be the type, which will not revive. Now, Ayesha, it's up 7 times in that space. So don't, expect stock market returns to come. But the back-ended results have been very positive. I think the crushing season behind, you've seen a hike in SAP prices. All good news maybe in the price in sugar. And I think that now commodities may be, particularly soft commodities, may be headed lower, given the type of news flow from the government on non-exports and so on. So status quo on sugar, Balrampur Chini continues to be our favorite pick over there. As a disclosure, Bajaj Hindustan was in our portfolio about 1.5, but I think tripling 4 times made us also greedy and stay the course, but be with the large caps. EID Parry, DCM Shriram, and Balrampur Chini. These are 3 stocks. If you want to buy, you should be in it. But we think there are better sectors which can outperform sugar in the near to medium term.
Kunal, railways, defense, power names, PFC, etc., sugar, these are all sectors which have chugged along very, very nicely in the last 2 to 3 years. What's looking like a place that you need to book profit? What's giving you the amber signal?
Well, as of now, nothing, frankly, Ayesha, because even after the rally for many of these PSU names, the defense stocks, I think the only sector which actually comes into play is the possibility the high beta railway stocks. That's the only space where there has been a lot more choppiness, but lack of direction in the last 2-3 weeks. That's one of the only sectors where I believe that maybe there could be another at least 20%, 25% of a retracement or a correction before these stocks stabilize, and then they come back towards a good or an attractive accumulative point. But many of these stocks like power names, REC, PFC, even though these stocks have moved from, say, for example, from 100 to 400, 500 levels, but it's not been a parabolic kind of a rise for these names. It's very slow, very gradual for these stocks. They've been chugging along their 50-day moving averages almost consistently in this last 300, 400 point up move for themselves. And even after, for example, Friday's correction for these stocks, I think they're just 5% or 7% away from its 50-day moving average. So when these stocks, they move very close to their midterm means, I think the capacity for these stocks to get into a sharper correction is far more less as compared to stocks which rise up significantly divergent from the long-term moving average. So as of now, looking at the power space, looking at the defense stocks, HALB, etc., these stocks have been more consistent in terms of their trends, and I think that's where I would probably not expect any major correction into these names.
Okay, stay across to Naresh as well and talk to him about a few financial stocks. SBI had a stellar run last week. I think it was up over 10% in the week gone by. And Yes Bank was on its own trip. It was up almost 30%. Would you continue buying into these names, Naresh?
So SBI would still be a buy on dips. If you look at it, the stock broke out above that 660 mark finally. We've done 3 days of a move and quickly from 650, 660 levels to 725. The last 3 days volumes has been higher than the last few months. So clearly price volume action is strong out here. So in this case, you want to be buying on dips wherein the structural breakout has taken place. On the other hand, Yes Bank, I'll continue to avoid uh, purely because the price is not a clear indication of where the stock has reached. We are back to a market cap of 90,000 crores where it was pre the whole fiasco at 400 rupees. So the upside looks limited from here. Downside could be more. So avoid on Yes Bank, a buy on SBI on dips.
Okay, that's a buy coming in on SBI. In the meantime, let's just take stock of ONGC as well. Now, this has really been the star performer of the last 2 weeks. The numbers have come in, they've not quite matched up with what the street was penciling in. And Morgan Stanley's come out with an interesting note. While they maintain their overweight with a target price of 254 on ONGC, which it's already managed to beat. What they're saying is that dividend growth is going to be key for ONGC to expand multiples and ROE. Sanjeev, what is your thoughts on ONGC after the rally which has already played out in the stock?
Well, we continue to be overweight. It's in our portfolio. We think this is the best energy stock to own in India, and it is very, very reasonably priced. This sheer weight of ownership is at the lowest we've seen, and pessimism at its highest, just like in HPBP. So I don't rule out targets of 325, 350 coming, and that may come faster than we thought. This is going to be one energy stock you want to buy on any decline and add in your portfolio. As a disclosure, this is in our portfolio.
Okay, point taken. So that's about the oil marketing companies. But Honasa Consumer also came out with its numbers, and it was a very strong show, at least on the revenue front. There was a sizable jump. And overall, Mr. Bhasin, whether you take the case of PB Fintech or Zomato, even Nykaa wasn't very ugly, and now Honasa as well. Do you think that time is coming again for all of these new age tech companies per se?
Well, yes, and if you left aside the Paytm fiasco, they all are reporting very, very strong numbers. In fact, Paytm will also come out with strong numbers, but it's surrounded by controversy. So yes, as a disclosure, PB Fintech and Zomato are two of our topics. We also own Paytm, unfortunately, and we are suffering. But I think PB Fintech would be my top pick, given that the management guidance talks of extremely positive growth and they've surpassed all expectations. I think this is one stock which you must add here and on decline. This could be the biggest fintech gainer in 2024.
Okay, that's the take coming in on PB Fintech and, of course, the entire fintech universe. In the meantime, the other star performer of late has got to be LIC. Let's just bring up the last 15-day and 1-week chart on LIC. In fact, JP Morgan has now upgraded the stock from its earlier neutral stance to now overweight. They've upped the price target as well to a 1340. The stock is already closed in on that 1,000 plus figure. They're saying that they've posted strong NBV growth in the third quarter, and that's what's instilled this upgrade coming in. Sanjeev, your thoughts on LIC? Finally, it's begun its move.
Well, it should have done that much before, Ayesha. If PSUs as a pack market cap has gone up 5 times, Adani market cap has gone up 3 times, LIC was a no-brainer. Given that, now their APE has grown aside from the private insurers. And also, they are now very, very careful about how diligence goes, how transparency comes, because it's a listed stock. I would expect more upside after some consolidation. And definitely, like I said before also, insurance is a must-have in your portfolio. So you must combine some of the private insurers with the PSUs. And I think LIC, New India, SBI Life, HDFC Life, if you did a basket and kept your time horizon slightly longer, then, like you said, even at 22,000, these are very, very good plays with a longer term view.
Okay, Mr. Bhasin, on that note, we let you go, but let's also listen into the management of Aurobindo Pharma, what they had to say on their con call.
Direct at the contribution to revenue, etc., would be helpful.
Yeah, your understanding is right. In fact, the non-aseptic lines will start off sometime in next few weeks, and aseptic lines will take a month or two. And we expect that entire production to get streamlined by end of this financial year. we expect that because of this stoppage, it can have an impact of around $20 million in Q4 of this financial year.
Okay. And when you say streamlined by the end of the financial year, is FY24 or FY25 year?
I'm talking about FY24.
FY24. Okay, sure. And then, the second question on the EBITDA margin, which you guided for 20% for this year, and then we have also said that Penji plant at current prices, etc., could help us improve that. Beyond that, what other levers do you see for the next year for the EBITDA margin improvement on a year-on-year basis?
See, at this stage, Kunal, we are talking about achieving 20% for the year. Already we are 19.
Okay, important commentary coming in from the management of Aurobindo Pharma. They're saying that they're confident of achieving that 20% EBITDA margin target that they've set for themselves. However, of course, there were these US FDA issues that had happened at one of the important plants, Ayesha, wherein there was talk of value unlocking as well. For that, they are saying that they're expected to restart the activities at the plant soon. They will be submitting a response on the Ayesha 3 facility by February 26, and there might be an impact of $20 million in the Q4. So those are the latest update coming in. They will be restarting the plant soon, but at least on the EBITDA margin front, they're quite positive. And overall, the US sales is something that were, supported by the new product launches as well. But Sandeep Sabharwal joins us on the show. Sandeep, let's begin by talking some of these pharma names itself. If you track Aurobindo Pharma or Divi's Lab closely, either of them?
So Divi's Lab has been, in general, underperforming expectations, and and delivery has been somewhat not as great. And I think that's the difference which we are seeing between branded formulation companies and pure API, like API-based companies, which have been underperforming because API still see pricing pressure. But on the other hand, the formulation companies are benefiting because of lower input prices and reporting higher profitability. So Aurobindo, I think they have got into some issues with one of their major plants. Now, I was just listening to them saying that it will be resolved in 2-3 months. Historically, FDA issues never get resolved in 2-3 months. They take a prolonged period, almost a year or so. So depending on how that goes, I think that will determine the performance.
Sandeep, what's been your portfolio positioning since the start of the month up until now? Barely a week or so, but anywhere you've added positions or booked profits?
Not book profits, but we are sitting on around 15-20% cash because I have been expecting some correction. So correction happen fleetingly, but they don't sustain and the market bounces back. So till we see some more reasonable levels in the market, it's tough to buy. Like there have been specific instances of specific stocks of the portfolio doing well. So that's something which we are watching out for. But in general, a wait and watch phase right now.
Wait and watch phase. Kunal, do you anticipate a correction at all or a dip in the market? And if so, is it going to be shallow and very quick?
I think it's going to be shallow, it's going to be quick, it's going to be more rotationary, if I can use that word. Because, for example, currently the benchmark Nifty is not showing any major signs of a correction, but the Bank Nifty is already started to show signs of correction. So maybe if the Bank Nifty starts to get into a recovery phase, you might have some odd sector which could probably get into a correction. So that's generally part and parcel with every phase of the market, even on an uptrend and even on the way when the indices are a bit sideways. So, I was mentioning at the start that there's no major change in terms of the open interest bend for the indices, which warrants any kind of a major, inclination from traders towards a correction for the benchmark indices. So no major jump in the open interest or a significant drop in the open interest, which indicates that there's been a certain withdrawal of long positions for the Nifty. So I think on the back of this data point, it seems like the index would remain into a bit of a volatile zone, but the range could be a bit more broad, some 600 to 700 points on the Nifty.
Okay, point taken. The range is going to be broad, around 600, 700 points, but just keep your eye out on those dips as and when they happen. But Sandeep, I also wanted your take regarding Hero MotoCorp, if you got a chance to look at the numbers and the overall two-wheeler space, because the commentary for rural India seems to be improving. We heard from a lot of managements at the Global Business Summit as well, and we'll play out those sound bites. But what's your take on rural India and Hero MotoCorp?
See, depending on which industry you are, the commentary of companies on rural India have been very different. Like, for example, for most of the durable companies, X of two-wheelers, their commentary still has been a bit soft. But two-wheeler rural sales are doing very well, whereas the consumer FMCG sales in rural India are still subdued. So I think it's not a straight yes or no on the rural markets right now. So, but I think the trends are positive, and as such, I think what we are seeing in the two-wheeler markets could get repeated in the rest of the durable and non-durable space going forward as we go into this year. So that could be the opportunities in those spaces. Hero Motocorp has had a very strong run up, and I think at these valuations, it more or less factors in all the near-term positives. So I think if growth like this sustains continuously for a long period of time, then we could see more upsides. But I would think that it's fairly valued at this point of time.
Naresh, which way is Reliance going to head? Because, if it's bearing on the index and the kind of choppy ride, yes, it's managed to now move on to that record high zone. But again, it's not a daily participant in the index move.
So, if you look at it, the structure and the way Reliance generally moves, it moves in spurts, takes a pause, and then again moves in spurts. So, if you look at it, it was consolidating around the 2600 mark, made a dash to 2800, then consolidated between 2650 to 2800. Then we saw a dash right from retest of 2650 all the way to 2900 plus. And now we are again consolidating around this 2850, 2950 mark. Ideally, once this consolidation, the tight range is over, we could go towards 3200. So the structure is extremely positive, and mind you, for a period of say right from September 20, where it topped out, we did not see major trending moves for the next 3 years. We made a top in October 21, which was not crossed up till October of 23. So it's gone through a 2-3 year period where the returns were not great compared to the index, and now we are getting into a trend. So this continues to be a buy on dips, and even at current levels. So I would expect the next move to be towards 3200.
Let's move towards 3200 on the stock. But Sandeep, real estate and hotels or hospitality, do you think these are two spaces that one should start trimming positions and booking profits into?
So I think hotels specifically, we are holding Lemon Tree Hotels and Indian Hotels. Now, I'm not selling both of them because I do believe that next 2-3 years still will be very good for them. Especially Indian Hotels has a very strong strategy under the current CEO, and I believe they are doing many things which will help shareholders, which includes getting profit out of ancillary businesses, expanding to areas which are underpenetrated, and also moving globally. And I think that could help them. Lemon Tea recent results were subdued, but I think directionally it still seems okay. On the other hand, real estate, I think uh, real estate, in my view, is entering into some sort of a bubble at this stage, given the way the frenzy is built up, the kind of advertisements we see of new real estate projects, and the price movement which has been there in the real estate segment. So I think we should be careful at this point of time because this kind of price hikes and volumes are very tough to sustain. So, and the stocks have run up substantially also. So I think this is one segment where we should be a bit careful at these prices.
The other space which is going to be in focus is aviation. Just last week you had the parliamentary panel which advocated DGCA intervention to tackle surge in airfare prices as well. And the Civil Aviation Minister, Jyotiraditya Scindia, clarified in the parliament just I think on Friday or so, saying that civil aviation is a deregulated sector. It was deregulated back in 1993, saying that airlines providing travel at a reasonable cost, and analysts see no impact of parliamentary panel recommendations on price controls whatsoever. Kunal, only one stock to track pretty much there, Interglobe. You think that will remain in ship shape?
Yeah, it still should because the stock it has stood one of the major times in terms of volatility for itself. The last 3 months, 4 months from I think November mid part where the stock had broken past above its 250-day moving average, I think around 2650, 2700 mark. From there, the stock trends have been a lot more consistent In fact, in the last chunk of 2-3 weeks of price action, when the stock has corrected from 3,200 to 3,100 levels, the volumes have been a bit lower as compared to the volumes when the stock was moving up higher. That also indicates that possibly the stock may continue to remain into this uptrend. Friday's recovery from the intraday lows, I think the low the stock had made was sub 3,000. But then the recovery from intraday lows also indicates that maybe the demand for the stock is closer to those 3,000 levels. So I think looking at the last 3 months, 6 months chart perspective for Interglobe Aviation, I would still believe that the stock should be a good buy on dips.
Sandeep, although the rebound in SpiceJet as well has begun, but would you stick by with the market leader, that's Interglobe?
I would. So we hold Interglobe in few of our portfolios. So I'm positively glad. I think their competitive positioning is very, very strong, and the kind of cash flows they are generating. I think not only in India, I think globally also we've rarely seen any company do so well. So they have a good strategy of keeping costs under control, and they operate on that model, and they are doing very well. The only risk for Interglobe, as all of us know, at periodic intervals, is that the ex-promoters come to sell a part of their stake periodically every few months, and that creates a depression in the stock. SpiceJet, again, the news flow is decent because they're getting a significant fund infusion, which will obviously not only help them survive but also sustain. So I think it could be interesting how they play this out. So we'll have to watch for some time because and then take a call on SpiceJet, I would say.
Okay, SpiceJet is a wait and watch. But Naresh, on the charts of UPL, which saw quite a bit of breakdown in the week gone by, and on the other hand, Trent, which saw a solid run, which is the stock that you would recommend a punt on?
So I would wait out for UPL closer to 400, 420 if it comes. That should be a good entry point because that's the price it made a bottom in 2020, end of 2020. And on the COVID lows, it was at 250 rupees. As well as if you go back to 2018, the stock had made a bottom around 400 odd levels and then again rallied back to 700. So closer to 400, 420, a good trade would be to get into UPL. Trend, on the other hand, is actually something which should be on the short radar than the long radar. Because what we saw is post the numbers, we saw a huge short covering. The stock went up sharply and it has done really well over the last few months as well as few years. So out here, not a buy at current levels. One needs to actually wait it out. I expect the stock could actually go sideways for many months together from here on.
All right. Meantime, Sandeep, wanted to get in your thoughts on Honasa Consumer. Just wondering if you've had a look at the kind of jump they have delivered in their profits, what the outlook is on the business as a whole, or whether or not you like anything within the new age tech space?
So in the new age tech space, I think the only company which is doing very well is Zomato, obviously. Now, Zomato is again a question of at what price you buy because I could never buy it because when after it bottomed, it just shot up. So I think then it's a matter of timing when you want to time. But I think incrementally, their trends and the way the profitability is coming could hold that company in good stead. On NASA, I think numbers were, although on the face of it, profitability improvement looks good, but I think the growth was a bit lower than expectations, and we need to watch their profitability trend because a lot of their growth is advertisement and publicity push promoted and how that plays out. And there were also news flows on high inventory into the system, which is showing good results at the company level, but there's a lot of inventory which is there with uh, at the retail level or with the distributors, etc. The model, whatever they operate. So I think that's something which we'll have to watch out for.
Okay, and it's interesting as well that Zomato in the news, as now we understand that they're looking to step up their restaurant signings as they have seen a bit of an overall slowdown there. That's in the shareholder letter. Those are the pre-open rates, by the way. You've got the the equity markets that have gotten off to a fairly decent start. Remember, last week was all about consolidation. It was the broader end of the market that felt the heat on Friday's trading day. So for now, it's a quiet move, 71,362. That's the Sensex, and the Nifty settling around the 21,860 levels. Let's get in mid-cap trading calls as well from our chartists. And Kunal, what are you flagging off today?
Yeah, so from the mid-cap arena, there has been lot many stocks which have been buzzing in terms of activity. One of the stock which looks attractive for trade is Indiabulls Real Estate. The stock in the last, I think, 1 or 2 weeks has risen up more than 15 to 20% from 100, 104 to now 120 plus. So looks attractive for a target of 140 on the upside, stop loss at 190.
Okay, there you have it. That's Kunal's top recommendations from the broader universe. And Naresh, what are you flagging off?
So that would be a buy on Tata Communications with a stop loss at 1700 and a target price of 2000. The stock has made a classical triangle formation and a very tight range for the last 2 months, 1700, 1670 on the downside and 1770, 1800 on the upside. And the range has been contracting. So has a breakout very close to the breakout points now. So expecting it to take leadership and go towards an all-time high.
Okay, so those are the top recommendations coming in from our charters. But Sandeep, before I let you go, I wanted your take on the electronic manufacturing theme, because this quarter numbers from either an Amber or a Dixon or Syrma SGS of the world weren't impressive at all, and these stocks are trading at very high valuations. What should one do if you're holding on to these stocks? Is it the time to book profits or just hold on?
I believe valuations are very high given the fact that these are low-end businesses which are largely surviving on very thin margins and PLI support from the government. So I think directionally, given the growth they will show because they get the PLI benefits, could help the stock prices sustain without too much of a correction. But for new buying, I don't think these prices make sense because these kind of businesses shouldn't get 70, 80 or 100 P.
Okay, let's move right on then. And thanks very much, Sandeep, for joining in and getting those other top stories that we're tracking. And the cash-strapped budget airline SpiceJet is set to lay off 1,400 employees. That's nearly 15% of its workforce in order to cut costs and retain investor interest. The airline currently has 9,000 employees. It operates about 30 planes. Of these, 8 are leased from foreign carriers, along with the crew and the pilots. And the company has actually confirmed these job losses. And in a major diplomatic triumph for India, 8 veterans of the Indian Navy who were sentenced to death in Qatar were released by the Qatar court. The capital punishment was commuted to extended prison term earlier following diplomatic intervention by New Delhi. Amid desperate pleas by the anxious kin of the Navy veterans, they have returned home. Of the 8 former Navy officers, 7 have already returned to India. And after France, UPI services will now be launched in Sri Lanka and Mauritius at 1 p.m. today. And in fact, that is part of the latest. But other than that, you've also got the Prime Minister Narendra Modi and the top leadership who has said that of the 2 island nations, Mauritius and additionally in Mauritius, RuPay card service will be launched and the digital payment service will be available for Indians going to these countries and for tourists who are arriving from these countries. And meantime, ahead of the Delhi Chalo March, over 200 farmer unions, the centre has swung into action. In fact, the farmer leaders will be meeting the union ministers Nityanand Rai, Piyush Goyal and the agriculture minister Arjun Munda in Chandigarh. Meanwhile, Delhi and Haryana borders have been sealed. Tight security is being maintained on all borders of Delhi and Section 144 has been imposed on the Singhu border.
A video of a mosquito tornado in Pune has swept through social media. The mosquito tornado, though not uncommon in certain regions during specific season, it is a rare occurrence in urban areas like Pune. Recent weather conditions have reportedly created a favourable breeding ground for the insects in cities like Pune. Khabar on Dalal Street. As always, my colleague Sharad is joining us with the latest. Hi Sharad, good morning.
In focus is Syrma SGS, and the khabar in the street is that the company is expected to onboard more senior hires across the different verticals. Now, the company's focus is coming into hire specialized hires across different verticals, and importantly, the company is set to have hired global consulting firm McKinsey as well. Now, of course, the entire focus would be coming on the growth aspect of it, especially on the addition of the customers front, especially the high margin customers, which the company had stated in their con call, and they'll also be focusing on their growth metrics. Now, the third quarter itself recently, the company came out with its numbers was largely flattish, and this is because there was a delay in the execution. Now, in the con call, the company stated that there would be 110 crore worth of execution which will be pushed to the fourth quarter. So that actually explains that the fourth quarter is expected to be on the higher side when it comes to the revenue performance, and also margin improvement is expected to kick in as the company is doing its cost optimization program. Apart from this, also the company is having an order book of roughly 4,800 crore rupees, and for FY25 the company is estimating that the revenue growth CAGR would range between 30 to 40%, with the EBITDA margins expected to hover around the 7 to 8% margin range.
All right, thanks very much, Sharad, for that. Let's get you those index calls, and here's what our chartists are advising you do with respect to the Nifty and the Nifty Bank Index. Kunal maintaining his buy on dip strategy on the frontline index. Naresh believes that it's no trade. Dips when it comes to the Nifty Bank Index. No trade from Naresh. That's the call from our chartist today.
Okay, just taking stock of which are the stocks which are buzzing around in pre-open. Easemat is opening with a gain of around 4%. Indigo Paints is the other one that deserves mention, that also is showing an uptick. Aurobindo Pharma, Bandhan Bank, LIC, these are some of the names which are expected to start in the green. On the losing side, however, SJVN is likely to start with a cut of around 10 to 11%. Tata Power is going to start in the red, and Amber Enterprises are the other names that one needs to keep a track of. But Naresh, let me come to you on the charts of Amber Enterprises as well as Aurobindo Pharma. What's your take for the two?
So Amber Enterprises gave a breakout into new all-time highs. Previously, the stock had topped around 4,000 levels. We went to 4,600, and now it becomes very important that if we continue, the stock needs to hold on above the 4,000 mark. If it does not, then we go towards again a consolidation phase. So for now, if it's a big gap down, it's an avoid. Aurobindo Pharma, on the other hand, what we've seen is a classical short-term topping out case, wherein it was struggling at 1100, 1150, and we saw a sharp downtick. Out here, ideally on the downside, 900, 950 remains a support. On the upside, 1100 should be a problem. So it remains a sell on rise closer to 1080 to 1100.
Okay, fair enough. Meantime, Kunal wanted to get in a take on ONGC. Given the kind of move that we've already seen play out, the fact that brokerages as well continue to maintain their outperform target calls and targets have been upped. What's your view on ONGC?
So I'll be bullish on the stock. In fact, I would believe that this could be a very good opportunity in case if the stock tips down, say a few percentage points, closer to 250 to 55, could be a very good entry point for traders who missed on the stock earlier. ONGC is typically a very low beta stock, and low beta stocks, they generally very rarely tend to go into high phases of high correction for themselves. So an odd correction of 4-5% for these stocks should actually be taken as a good opportunity to chip in or to accumulate further.
Okay, on Friday it was about Idea, ACC, there was Z also which sprung up in trade. Let's see which way the trades actually head in today's session. Bunch of stocks which we've been highlighting which are going to be in focus, starting off with Hero MotoCorp, there's BHEL as well. Remember, I beg your pardon, there's ONGC like Avanne just flagged off. There's JSW Group, which has signed an MOU with the Odisha government to set up an EV unit. The investment is going to be as sizable as 40,000 crore rupees. So that's going to be another group which is going to be in focus. There's DRL, of course, which we highlighted. The US FDA has issued an EIR for one of their units. So that's going to be the other stock. 1% higher is where it starts off in trade. There's PI Industries, which came out with its numbers. Honasa Consumer, which came out with its numbers. So all these stocks are going to be in focus on the back of some positive reportage that's seen. Actually, a big move coming in for Honasa, which is gapped up nearly 5% as we speak right now. Aura numbers also came out. The sales have come in at a record high of about almost for $51 million. The US sales, that is. Oro as well gaps up by about 3.5% as we speak. And then, of course, there's Stovecraft and the all newsmaker, that's Paytm. So let's take stock of where that stock as well is up to, because the last count, they've set up a committee to now strengthen the compliance and regulatory matters at Paytm. The stock holding around that 430 odd mark in trade right now. Landmark Cars as well came out with its numbers, though. There's been a bit of a margin dip. The net profit as well has fallen about 29 odd % or so. And that stock has seen a big drop, about 2.5% as we speak right now. On the weak side, in any case, there's Bandhan Bank, there's Divi's, there's MCX also, wherein the Q3 numbers were sub-expectations. Tata Power as well largely was a below estimate set. The margin has come in flat on a year-on-year basis. So these are a bunch of other stocks which are in focus as well. But Kunal, as a trend for the Nifty Bank, what do you foresee? Because there's such a disconnect with what the Nifty has been up to, and within banks as well, what some of the private banks are doing and what some of the others like an ICICI Bank, Axis continue to do.
So I think it's very difficult to now project the bank Nifty from here on, because there are two parts to it. The private sector banking names like HDFC Bank, etc. These stocks are reeling below their long-term moving averages, 200-day moving average, by a margin of, I think, 7% to 10% broadly. So that's a steep kind of a margin for these stocks. On the other hand, the PSU banking lot, the large cap PSU banking names, are the ones which are outperforming, very consistent in terms of the price trend, making new highs for themselves almost on a regular basis for themselves. So these are two divergent aspects for the bank Nifty when we look at this for the internals. Now bank Nifty in terms of the index has come back towards the 200-day moving average. If I go by the last 1.5 odd year of pattern for bank Nifty, then every time the index has come back towards its 200-day moving average, corrected by a margin of couple of percentage points, but then it spent more time at those 200 DMAs and then found a bottom for itself and managed to recover. So we can just expect that maybe this could be a one-off, one of the similar kind of a trends we've seen over the last 1.5 odd year of the underperformance for bank Nifty, where it's going to spend some time at the 200 moving average. But the concern is that whether the private sector banks would start to fire up and whether these stocks are actually closer to their major bottoms, that could probably determine how quick the recovery could be for bank Nifty.
Okay, let's wait for that recovery on the bank Nifty. Has been taking a lot of time and boring us with those sideways move for the longest time. At least on Friday, there was some sign of recovery there. Let's see whether it continues the momentum or not. For now, at least it's holding up in the green. And overall, we had seen that it was a favorable handover that we got at our hands this Monday morning, because if you look at the S&P 500 in the US, that hit a record high of over 5,000. The Dow as well as Nasdaq as well as S&P have been hitting fresh gains for 5 straight weeks. And that momentum has been very solid there, given the earnings beat consistently that we have been seeing in US. It has been a different picture back home, because the earnings, at least at the fag end of the earnings season, haven't been that impressive. But then there are pockets which have managed to beat the expectations. At least overnight we saw good numbers come by from the likes of Honasa, etc. And that's something which is reacting as well. Aurobindo Pharma too was a decent set, and all of these stocks will be in focus, Ayesha, this Monday morning, because it looks like we are going to start in the green. But the question is, how long do we sustain?
Oh yeah, absolutely. The pre-open rates itself are indicating a mildly positive start, and that range-bound trade clearly continues from last week. Like you just flagged off, Anisha, much unlike our US counterparts, we actually fell short of a price action. So we were just a little mild in trade on a net basis over the week gone by, down about 0.3, whereas the US equity markets did a lot more better. But again, the first rates on your screens this Monday morning. Let's start off with ONGC, the big one, and what it's currently up to in trade. So that stock will just come off you on your screens first. And then, of course, Hero MotoCorp as well. ONGC, though, starts off lower in trade. I guess those rates will actually pick up from there. Hero MotoCorp down 2%, even though there's been a margin expansion and the EBITDA has come in higher by 47%. But the tilt of the market clearly is flat, inching lower as we speak right now. There's DRL, there's Aurobindo Pharma. Both those stocks should come up for you on your screens, not just news from the US FDA, but also earnings. 2.5% higher for DRL. Oro will just come up for you on your screens. Next, 3% higher for Pharma as we speak right now. There's Honasa Consumer as well. The pre-open rate itself was indicating a gap up start for this one. So let's see what that stock is up to in trade, because it should be a decent move for Honasa as we speak right now in a trade. Honasa has started off with a 7% gap up, no less. So that's a decent start coming in for Honasa on the back of its earnings. A lot of other names which are in focus as well. There's Inox Wind. There's been an earnings beat driven by better execution of their wind turbine generators. Everest Canto Cylinders, wherein the domestic and international sales remain robust. There's DOMS as well. The Q3 PAT has jumped up about almost 43%. MCX, wherein the company is saying that they've already shortlisted the names of candidates for the post of MD and CEO to SEBI now. So that's going to be the other one, although the numbers have not been all that impressive. Sri Renuka Sugars, the board has approved raising about 250 crore rupees via QIP. So that's another stock which is going to be in focus. And then, of course, this Paytm continues to be in news. They've set up a committee to strengthen the compliance and regulatory matters over the weekend. 1% higher barely is where Paytm is right now. And then Landmark Cars, I want to see what this one is up to, because ever since its listing, it has had a very, very smooth ride, but the numbers are not looking all that impressive. It's a 7% downtick that you're seeing on Landmark Cars to start off with. Ayesha, anything that you're spotting?
Yeah, I'm excited about the IT sector because that one is the top gainer right now, at least at the sector level. So Wipro, HCL Tech, Infosys, Tech Mahindra, they're all starting on the front foot. No major news flow as such over the weekend, but there were reports that Wipro might be laying off some people in order to maintain their margins. So let's see whether there's any truth in that story or not. Pharma stocks led by Aurobindo Pharma, Dr. Reddy, Divi's Labs are fairly excited. While energy stocks are coming under pressure, real estate, PSU banks, they're all in the red right now. So market clearly giving